I'm Foreman, and in this video I'm going to discuss when to buy or sell a crash with one of your holdings in a portfolio by talking about one of my own investments that has actually crashed quite significantly in the last month and is down massively, or over 50% from their all-time highs. And if you like the video, please drop one of these to beat that YouTube algorithm. My holding is with a company named Argo Blockchain. They are a Bitcoin mining business. However, they also mine Zcash, although this is a flexible business model in which they were strategically reviewing whether to continue mining Bitcoin, or if a new, more profitable cryptocurrency comes along, they can transition their machines, hopefully providing a higher return on investment, and then mine that currency. However, for the moment, they're invested in Bitcoin and they are mining that too. They aim to be energy efficient using strategic locations and some of the cheapest electricity rates in the world, and this allows them to maintain very high profit margins. They also have a stake in Pluto Digital Assets of around 25%, in which they are invested currently, and this is pre-IPO. Pluto Digital Assets invest in a range of digital assets in the cryptocurrency space, and so there's diversification just from the blockchain mining. Argo Blockchain is currently the only cryptocurrency mining company listed on the London Stock Exchange, meaning their valuations are likely going to differ to their US competitors. This could lead to the stock being very undervalued because the UK markets are quite lackluster, at least with these types of investments. So why has Argo Blockchain dropped recently, and why am I talking about whether to buy or sell the crash? Well, ARB is tethered to the price of Bitcoin. Lately, Bitcoin has not been performing too well, to say the least. And this means that Argo Blockchain is impacted much more. This is because if Bitcoin drops, Argo Blockchain's future expected revenue and earnings also drops because it calculates that price of Bitcoin. However, because Bitcoin's dropped, this means their future expected earnings are going to drop by a much higher amount, therefore leading to Argo Blockchain dropping by a much more significant margin, or at least industry cryptocurrency miners will also do the same. However, in my opinion, this is a good way to get exposure to Bitcoin without holding the underlying asset and investing to get more returns, providing you're very bullish on the long-term prospects. Bitcoin has fallen more recently due to the likes of Elon Musk. At first, there was speculation as to whether he had sold his Bitcoin holding in Tesla, which is not the case. However, that was feared for a little bit. However, the main issue is that he decided that, well, he was told that Bitcoin isn't environmentally friendly enough. And so they said they would no longer be accepting transactions in Bitcoin and instead want to work closer with Dogecoin and make that more environmentally friendly as it handles transactions more effectively. This basically means that Bitcoin is supposedly bad for the environment as more energy is required to mine this technology. Argo Blockchain had actually fallen prior to the dip in Bitcoin alongside other industry cryptocurrency miners. This was due to the growth stock pullback, and this is where investors had therefore transferred their cash, taken profits out of these growth stocks that had tripled or quadrupled in 2020, taken their money and invested that in the value recovery stocks, the stocks that are likely going to benefit as the economy reopens, and therefore the money is invested there instead. This has led to seriously harsh pullbacks on a lot of these big US growth stock names and some in the UK. This is also a relatively new industry with Argo Blockchain is in, and so it's very difficult for accurate valuations to be placed, as we don't know the fair value which this industry should uphold. Should it be more of a premium industry or not? And so at the moment, there's a lot of uncertainty in the markets, and the markets don't really like uncertainty, so this is where we have a lot of volatility. I think it's very, very important, if not the most important thing, to understand your underlying companies or investments. It's very important to know exactly how these businesses work, who their competitors are in the industry, and what their long-term prospects are. This allows you to build up your conviction. The more research you do in a company, the more conviction you should have. This then allows you to know whether to buy or sell a dip. For instance, the changes or underlying fundamentals in the business might have changed. This might have led to a 10% decline in a certain stock. You may decide, well, this impacts their long-term growth, and so you're going to sell out. Or you might say, well, the underlying fundamentals of the business have changed. Shares have dropped by 10%. However, this could be advantageous in the long-term growth of the company, and so this is a good value to buy more. And so it really depends on your level of knowledge, because if you don't have that underlying knowledge, how are you going to know whether it's a good deal or a value trap. Especially if you didn't know about the US competitors of Argo Blockchain and you had just imagined that Argo Blockchain had dropped on their own, underperforming Bitcoin, and hadn't known that the competitors in the industry have also had significant pullbacks too. So how much am I down on a position and what is my position size? I currently hold 3,000 shares of Argo Blockchain at an average price of £2.09.72. I've pointed that, oh, it's the same, 2.0972. Although I must state that 1,068 of these shares are actually a free ride. This money I had made from my Trading 212 affiliate income. With this money, I had managed to double my investment and then transfer this inside my ISA using a tactic called bed and ISA, which effectively means I sold out of a general investment account, bought inside the ISA, and for the long term, I have now got the tax shelter to protect it. If you're interested in signing up to my stockbroker, which is Freetrade, then click the link in the description down below as you can get a free share worth up to £200. My overall position with Argo Blockchain right now is down 38%, which to a lot of people, that is a very savage dip, especially when Argo Blockchain is my third largest position. So the portfolio in the last few months has certainly been dragged down massively. In fact, recently on my Twitter page, I had mentioned that Argo Blockchain had reached 20% of my portfolio, and therefore I was going to set an exposure limit. This meant I would not be buying any more shares of Argo Blockchain to protect myself from further downside in the very off chance that I am trying to catch a falling knife and getting hurt. I also stated that there are no stop losses in place, and so that I'd be willing to ride out the dip and hold for the longer term. However, this whole idea had got me thinking, and that is, if I am able to truly understand the investment, I would then know much better whether to buy or sell this crash. And whilst yes, I could stop that exposure risk by not buying any more shares, now would also be a great time to double down on that investment, which sounds very much like a gambler's term. But with the knowledge you may have behind it, this could be a very strong time to not only lower your average price, get more value in the stock, but then if there's a lot of drivers for the long-term share price, then this could be an excellent time to really bolster the returns in the future. But before even considering lowering that average price, there's a lot of things to understand, such as the competitors in the industry, and the long-term drivers positively and negatively for the share price. And I personally like to break down these factors so that I can get a clear insight of how the business is looking and whether it is worth buying more or just cutting the losses and selling. So when comparing Argo Blockchain to the industry, they're in fact very promising because they have higher mining margins. In April alone, they managed to maintain a margin of 85%, which is 1% higher than they did in March, which was 84%. They also managed to mine 163 Bitcoin compared to 165 in March, but this is also still very impressive. They are still adding to their HODL, which is their long-term hold of Bitcoin, and currently on the balance sheet they have 936 Bitcoin. However, this is subject to change as it's midway through May, and that May operational update will come in a few weeks, and it will likely be 100 or so larger. They also have a higher petahashes per megawatt. This basically means that the higher this number is, the more efficient they are. The higher levels of efficiency they have means the lower cost of price to run the mining machines, meaning overall they're going to have much higher margins. This is good because this scales very well. The higher this becomes, the longer term it will scale extremely well and mean that they can generate higher returns on their investments. This will only improve as the Bitcoin price rises. A rise in Bitcoin means that they're mining margins are even higher and they're going to be much more profitable from it. And all of their current mining machines have achieved a return on investment of over 100%, including the new machines that they set up in January and February of 2021. A few months ago, and they've already achieved a 100% return on investment. That is incredible. What are the positive drivers of the share price in the future? Well, currently they are dual listed in the US. They're listed on the OTCQX markets, which can have the potential to be uplisted into the NASDAQ. The NASDAQ is a very important milestone as it becomes much much more accessible for the US retail investors to purchase these stocks. For instance, the Nasdaq is also home to some of their biggest competitors, such as Marathon Patent Group and Argo Blockchain, which are currently 2 to 3 times higher in valuation of market cap compared to Argo Blockchain, and Argo Blockchain does have its own advantages that would certainly rival these market capitalizations. This also allows for Argo Blockchain to be listed and available to the Robinhood and Webull investors, as they don't have access to the OTCQX markets. And then having them listed on the Nasdaq means there's a lot of US retail hype that could certainly push the stock up a lot. But that's far from all of the outlook. They also have a Texas mining facility which they recently bought, and this is currently being built, a 200 megawatt facility called Helios, or that's the overall area. But then it also has access of up to 800 megawatts using some of the cheapest electricity rates in the world, which are likely going to be renewable. And I personally speculate, because it's Helios is the sun god and it's in Texas, that this could be a solar powered investment. And if they buy the solar power plant themselves, or at least farm, then this could make them even more profitable. And I believe they also have access to a £100 million or dollar credit facility, which does mean that they have that freedom in the future should they want to really scale up their growth. 25% stake in Pluto Digital Assets pre-IPO means that when they do choose to IPO, and initial public offerings are usually put at the best time that is most favorable for the company in the management's vision, I believe that this would be timed well enough so that shares would increase. Argo Blockchain could then have the decision whether to continue holding or take profits on this. I think they will continue holding on this investment, and overall this will add to the underlying fundamentals of their balance sheet and be yet another driver of share price growth, as Pluto does invest as a venture capitalist fund in digital assets in the cryptocurrency space, giving that diversification away from just mining cryptocurrencies like Bitcoin. With the predictions of Bitcoin in the medium term being very bullish, such as $100,000 by the end of 2021. This is very promising for Argo Blockchain if this comes true. This could mean that their revenue and earnings are going to scale exponentially. They're going to be having even higher mining margins. They're going to increase their HODL before then. So if Bitcoin increases, their HODL is also going to gain value, giving them underlying more fundamental value on the balance sheet, as well as greater future expected revenue and earnings, leading to a higher premium valuation, which gets ridiculous the higher Bitcoin potentially goes. Since at the moment Tesla is rejecting Bitcoin payments on their products, despite perhaps the situation where they have lithium mining for their electrical vehicles, and that's just as damaging for the environment, they will be looking at more, or this could create a trend in the industry in which investors are looking for more renewable sources of electricity that are powering Bitcoin mining or cryptocurrency mining companies. This is where Argo Blockchain is placed very well. As I've said before, a majority of their revenue or their mining is done on renewable or very cheap electricity. It's done on renewable electricity, meaning that they would be more favorable should someone be more ethical on their investments into Bitcoin. This could once more set another spark in the future, as they have this advantage over other people or companies in the industry. And this could certainly add to the investment hype when it does get listed, or potentially gets listed in the US, as it's speculation at the moment, and they've been awfully quiet about the idea. And when you apply for NASDAQ, you aren't meant to talk about it, or you aren't allowed to talk about it until that news has happened or it's over. However, the biggest risk with Argo Blockchain is not the company itself, but the underlying asset. Bitcoin is an incredibly risky and volatile asset in which it has really divided investors. Some group of investors believe that this will not last long term. Governments in no way will allow the adoption of long-term Bitcoin, as they lack control over the asset, and that it's not a very fair store of value, as it's very volatile, and therefore people would be less willing to put their savings into it. But at the same time, there's other people saying that it's the future of transactions in the financial space. Bitcoin is open when the banks aren't, and there's a lot of potential for the technology to be used elsewhere. And so there's a very much mixed bag, and this likely has a massive impact on the overall price of Bitcoin. If you're bullish over the long term, I'm still fairly mixed on this, but my opinions are changing rapidly, then this could be a great holding to have. And so when I look at the idea of Argo Blockchain investment in my portfolio, I'd like that cryptocurrency exposure. I could see that it's more worthwhile for myself to buy the dip. There's no reason for me to sell because the underlying fundamentals of the company are not changing. Yes, they're down 53% from their all-time highs, but the company itself is still cracking on with amazing revenue, great margins, and is going to continue adding to their balance sheet and their hodl. And so there's no reason, and this can work with any other investment. You look at the underlying fundamentals of the company. If they've not changed yet the share price has dropped, then that could be a great, excellent value for you to buy in. It does become more complicated when you look at valuations, and so they might have originally been trading at a massive premium and now on more of a fair valuation, but it is better to buy a wonderful company at a fair price than a fair company at a wonderful price. And therefore, in my portfolio, with my 3,000 shares of Argo Blockchain, I'm very likely going to contradict myself and what I said on Twitter just over a week ago. I'm likely going to average down on the dip, and I remain bullish on the company. I'm 38% down on the investment. I'd love to push down the average price and benefit over the longer term. I hope you like the new format of the midweek portfolio updates. I aim to answer questions more than just show you the portfolio and performance. Thank you for watching. If you're interested in my net worth at the age of 21, then click the card at the top right of the video. Stay safe. Have a fantastic day.